Welcome to World Energy Television. I'm Richard Loomis, the CEO of World Energy. And today we have the opportunity to speak with the CEO of Buccaneer Energy, Curtis Burton. Curtis, thank you very much for joining us.
Hey, thanks for having a visit with me.
Well, Curtis, you guys have been very busy in Alaska, lots of activity. Tell me about some of the success you've had this year.
We drilled the Kenai Loop well in Alaska. We've gotten third-party reserves from it. We've just completed a rig acquisition, which was a $68.5 million rig acquisition that enables us to go drill all the properties in Alaska.
So the Endeavor's been purchased.
We control that rig now, and it will be in Alaska for the next drilling season. What we originally represented to the market was that we were going to partner with the state and we were going to partner with Ezion Holdings, and we've done a preferentially excellent low rate, in fact it's at a bond rate transaction to acquire that rig, and we're now going to control the major asset that will be able to unlock reserves in the Cook Inlet.
Well, we both know the size of Buccaneer, and now you've bought a jackup rig. Is that a viable business?
It's absolutely a viable business. One of the things that we did a tremendous amount of research on before we went down this path was whether or not there would be other operators that would use this rig. And we see it becoming a profit center over time. Initially, we have a lock on the rig because we have 4 drill-ready prospects in the inlet that are very important to us. That was why we did it in the first place. But in addition to us, you've recently had Hilcorp sell off. You hear a lot of discussion right now about shale plays in the Gulf. Hilcorp sold off their shale holdings in the Gulf of Mexico to come to Alaska to go after the same thing that we've got a year head start on them for.
But what happened to KL number 3?
Well, KL number 3, obviously we all always want 100% success rate in drilling. Unfortunately, even when you do the kinds of things we do where you strive for low-risk drills, when you're probing the edge of a structure, you sometimes have disappointments. In the case of KL3, that's what happened. We found the edge of the structure, which we were looking for, the southern edge of the structure, which had the least impact on our reserve base. But that, even with that negative, what you're going to have is you have to have a water disposal well to drill in the area we're drilling in. So what we're going to do is we're going to turn lemons into lemonade. That will be our water disposal well. So we will benefit from the money we've spent, and we will still get 65% of the money that was invested in that back in a rebate from the state. So it hasn't negatively impacted our reserves based on what we see. It still will qualify for rebates.
So it's still a good company asset?
It's still a good company asset, and significantly, that other well is going to be coming online in December, just like we've said all along that it would do. And that well, the revenue at 5 million cubic feet a day from just that well represents about $8.7 million annually of net revenue to Buccaneer, which far exceeds our overhead and is a major plus for the company.
Just a moment. That begs the question. Why would you drill KL number 3 before you did your seismic survey?
Well, again, we knew where we thought some of the boundaries were, and we knew we ultimately were going to have to drill a water disposal well anyway. So when we weighed all of the things that we thought we knew about the structure and the pluses and minuses, ranked with the fact that we were going to recover the 65% money from the state anyway, we felt it was a reasonable calculated risk to take. Obviously, the market doesn't like that, but that doesn't change the fact that it hasn't denigrated in any way the asset value that's there. There's still a story there, and there's still a significant upside. What I would say is that we have been very focused on Alaska because we see that as the major area of activity at the moment for Buccaneer. That doesn't in any way, again, denigrate our Gulf of Mexico holdings, or whether they be on land or offshore. For instance, yes, Pompano right now is shut in. Gas prices in the lower 48 are $3.50 to $4 a thousand. We still have, based on our calculations, a couple of Bs of gas in the wells at Pompano that are shut in. One of the decisions we've made is to focus on getting the gas out of the ground in Alaska, where we have a contract that has a floor of $6 and a ceiling of $10 to get that gas out preferentially and minimize our expenses in the Gulf of Mexico. Now, to me, that seems to be sound business.
Well, your contract for KL number 1 starts in April, but you go on production in December. So do we have an opportunity between December and April?
We can sell into the spot market where historically in Alaska during that period, gas prices are average about $9 a thousand, but can go as high as $15 a thousand. So one of the reasons we're pushing very hard to get online is to take advantage of that spot gas price market.
So you might even see increased income off the one well before your contract starts?
Absolutely. That's been the plan. That's why we've been pushing. That's why we've been focused on getting things done.
Well, if we look at Kenai Loop onshore, you've already said that's going to be a very profitable field. But operating onshore is very different than operating offshore. How are you going to accomplish operating offshore as Buccaneer Energy?
Well, again, I think it's very significant that we uniquely, among all the players up there, and everyone else is much larger than Buccaneer, we have the tools to get to productive operations offshore. We have control of the rig. That's key. We have permitted, except for some of the final details, 4 offshore prospects in 2 different locations up there. The other operators are anywhere from 12 to 18 months behind where we are. So the opportunity to do some creative things with other operators in the region that want to move more quickly exist to our advantage. And you'll hear us taking advantage of that situation.
Well, as we've said, KL number 1 is going to make you $8 to $9 million at its minimum. But operating offshore is very expensive. How are you going to fund your offshore operations?
If you look back at our history, we have repeatedly performed and raised capital where we've needed to make things happen. Nowhere is that more evident in our ability to construct an innovative deal to acquire this jackup. That jackup is not on Buccaneer's balance sheet. That's a standalone company that was formed that we have control of. So I think there are a couple of steps to getting funding in place for Alaska. One is that we have talked for some time about getting bridge funding in place to deal with the ACES rebates, because there's some lag time between when you incur expenses and you recover the money from the state.
Well, Buccaneer obviously has income coming in on KL number 1. You've got bridge funding coming into place. How does that work?
Well, not a lot of financial institutions out there are familiar with the incentives that are in place in a place like Alaska. In fact, we've had a couple of financial institutions that have said they just simply don't believe that anything that lucrative could be in place. As they've explored it and found that it is in fact true, what we've had is, for the first time in Buccaneer's history, we've mainly been funded from activities in Australia and banking institutions in Australia. For the first time, we now have a German bank and a U.S. institution that are interested in providing that service to us. And we're in the process of making a decision about which way we go with that. But the key thing is the money that comes from that is, again, banks normally loan in what I might describe as unique situations. They have high interest rates, they want warrants, they want all kinds of things. This is actually more akin to the kind of receivables financing that banks do with businesses, where they know you have a receivable, and so because it is a very low risk probability that you're going to have an issue with it, they have preferred interest rates, and it's a very attractive way to put money into a company. That's what we are negotiating with now. All three institutions are offering us some very low-cost capital, which is important to us because it speeds up the process that we get that money back by, in some instances, as much as 6 to 9 months.
If you were sitting in this chair last November, would you have predicted that you would be in this position today?
Well, I think it was our prediction. That's the thing that so baffles me about the way the stock has behaved, because you can beat management up for not delivering on its promises. You can say, well, they were a week off on this, or they were a month off on that, or I'm disappointed in the well. But if you go back and you look at the series of press releases that this management has put out, we've performed on all of the major things that we said we were going to do. When we came out last year and we first started talking about Alaska, we said that's a major story. You don't have to take my word for it. Look at Apache Corporation, look at Hill Corporation, following in our footsteps, looking to do things over opportunities for shale plays, which are all the rage, in preference to Eagle Ford plays in the lower 48. They've come to Alaska, and they're 12 to 18 months behind us, looking in the same basin we are. I think we've done more than we told the market we were going to do. We've delivered on the rig, which is, again, for a company the size of Buccaneer, having acquired that rig is an incredible achievement. And again, if you look at the way the market has responded to that, it's nonsensical, in my opinion.
Well, particularly since Endeavor is key to all offshore opportunities, not just yours.
Absolutely. And in part, that's because the Endeavor is the only vessel that's going to be in the inlet that's capable of working in all the different areas that are there that represent revenue sources. So it's a very, very significant thing for the company.
And it is partially state-owned.
And partially state-owned, which, again, I think it's a clear statement of our intent from day one that we because we bought the asset at a good price, we had other alternatives available to us to fund that purchase with, and we chose to stay with the state because we felt that politically that was going to be of more assistance to us in the long run. Having the state invested with us was preferential to just having a bank invested with us, because the state wants to create jobs. They want to create a resource base, and we think being in partnership with the people that have the ability to prove your permits is a good thing.
Probably good business.
Probably good business.
Okay, let's stop for a moment and let's look forward 6 months. What does Buccaneer look like?
A significant difference. We will continue to pursue development in Alaska. We have a number of resource opportunities in terms of additional funds. You ask about how you fund all of this. One way is you bring partners into the equation. Because of the fact that we have such a preferential position, that's wide open for us. There are a number of ways you could bring a financial partner in, you could bring an industry partner in.
So at this point, you could pursue multiple strategies.
And all of them good. Again, I think the thing that the market seems to be missing is somehow or another they're not connecting the dots. If you look at the Gulf of Mexico, we still own over 27,000 gross acres of prospects.
State waters? Federal.
State waters. Again, one of the things that's not accidental, it's calculated, is that we are operating in state locations both in Texas, offshore, onshore, and in state locations in Alaska, offshore, onshore. All of the moratoriums you hear about, all of the things that slow projects down, happen in federal waters. And we have very few holdings in federal waters, and they're all in Gulf of Mexico prospects.
If we look at the media, the Eagle Ford Shale got hot in late 2009, 2010. When did you buy into the Eagle Ford?
That was part of the 2007 initial offering, and our property, our 2,500 acres in Lee County, that is currently producing a small amount of oil. We haven't talked about that a lot because, again, that's not been a big focus for us as we've been getting the rig done and getting all the other things done, but we've continued to mature that. We just shot a test 3D over that area that we haven't been talking a lot about, but that's a piece of property that, because it does have Eagle Ford pay in it, and it does have Eagle Ford potential as well as Sligo potential, there are a number of things that can be done with that property. We haven't been ignoring it, we haven't been hiding it, we haven't been protecting the market from bad news about it. We simply have been maturing it in what we believe is a sound business fashion, and we will do some things with that in the future. But right now, the focus, the thing that changes Buccaneer's future, are those activities that we undertake in Alaska, and they've all been overwhelmingly positive.
So as we round this out, if you were going to say something to your shareholders today, what would it be?
I've never sold a share of Buccaneer from the day that I started. In fact, I bought shares when it got down to 2 cents a share. I was buying shares. I think that there is a significant upside opportunity from where we are. Indeed, if you look at some of those third-party reports that have been done by outside buy recommendations, you're currently trading at a fraction of the value that even those recommendations put the value of the company at.
Well, when you talk about Apache and you talk about Hillcorp, Apache is currently trading at $100. Their Cook Inlet adventure probably won't have the significant upside to them that Buccaneers will have.
I think you're absolutely right. That's an excellent observation. But I also would point you to the fact that Apache is looking for big wins. And the fact that they see the same thing that Buccaneer saw 18 months ago, a basin that hasn't been touched by a drill bit since '93, that has within a 5-mile radius of where we will spud our first offshore well, has had 1.1 billion barrels of oil and 550 Bs of gas produced. Not speculatively developed, not maybe it's there, but that actually produced. I can tell you the best place in the world to find oil and gas is where it's already being produced.
So the future looks very bright.
The future looks extremely bright, and that's not an overstatement. It's not an oversimplification. We will get the capital in place to take advantage of the opportunity. And again, some people would say, well, that means we have to trust you. I would submit to you that when we've said we were going to do things over the past several years, we've repeatedly performed on that.
Well, Curtis, as always, thanks for your time, and we're going to be looking forward to seeing your activities over the next 6 months.
Thanks for your time.
I'm Richard Loomis for World Energy Television, and thank you very much for watching.